Hello everyone and welcome to Anandeshwar Uncovered. Guys, every modern civilization stands on a financial pillar known as the stock market. It is the engine that transforms innovation into wealth and national stability. Across the globe, we see diverse versions of this engine, like Japan has the Tokyo Stock Exchange, China dominates the East with the Shanghai and Shenzhen exchanges, India is witnessing explosive growth through the NSE and BSE, and Europe finds its center in markets like the Euronext Paris. But there is one market that doesn't just participate in the world economy, it leads it. A market so vast and influential that a single movement on its charts can trigger a ripple effect from London to Tokyo. We are talking about the financial superpower of the world, the United States of America. But before we dive into this, let's talk about what is stock market and how it's work. At its core, the stock market is a sophisticated global marketplace where ownership of the world's most innovative companies is divided into shares and traded in real time. It's more than just a trading floor. It is a complex ecosystem of supply, demand, psychology, and mathematics. It's where capital meets opportunity, allowing a visionary startup in a garage to eventually become a multi-trillion-dollar titan. But guys, as we stand in 2026, the US market is more complex than ever. In this video, we are going deep to answer the questions that define our financial future. Number 1, the infrastructure. Just how many stock exchanges does America actually have, and how do they differ? Number 2, the rules of the game. How is this massive machine regulated to ensure fairness in an era of AI and high-frequency trading? Number 3, the scale. Exactly how much capital is flowing through Wall Street today? We're looking at figures that will make your head spin. And number 4, and also most important, the global crisis. And perhaps most importantly, in the wake of the ongoing Iran-Israel conflict, how is the US market reacting to the threat of regional war? Is Wall Street in a state of panic, or is it showing its legendary resilience? If you want to understand the true mechanics of wealth and power, you cannot afford to miss this breakdown. We're going beyond the headlines to uncover the reality of the American financial system. Let's get started. So guys, number 1, we will talk about how many stock market America have. So the answer is America have two big dominants. When people say the US stock market, they usually picture the iconic facade of Wall Street. But in reality, the US financial landscape is a multi-layered network. At the top of the pyramid, we have the two titans, the New York Stock Exchange, NYSE, and the NASDAQ. The NYSE, founded way back in 1792, is the world's largest stock exchange. It's home to the blue chips, legacy giants like Walmart, JP Morgan, and Coca-Cola. It still uses a hybrid model, where human floor traders work alongside high-speed computers. Then, you have the NASDAQ. This is the digital-first powerhouse. There is no physical trading floor here. Everything is 100% electronic. The NASDAQ is where the tech heavyweights live. Think Apple, Microsoft, and the 2026 market leader NVIDIA, which recently crossed that staggering $4.5 trillion valuation. But here's what most people don't realize. The US actually has over 25 registered national securities exchanges as of 2026. While the NYSE and NASDAQ grab all the headlines, other exchanges play a massive role in liquidity and specialized trading. CBOE Global Markets. They operate multiple exchanges and are the kings of options trading. IEX Investors Exchange. Famous for its speed bump technology, which was designed to protect everyday investors from predatory high-frequency trading. The Texas Stock Exchange, TXSE, a newer player headquartered in Dallas, challenging the New York dominance by focusing on the booming energy and manufacturing sectors in the South. Now let's go even deeper. Not every stock is big enough for the NYSE. For the smaller up-and-coming companies, we have the OTC markets, over-the-counter. There are nearly 6,500 companies traded here. These are often referred to as penny stocks, or venture stage companies. They don't trade on a formal exchange, but are traded directly between networks of dealers. And then, there are the dark pools. These are private exchanges used by massive institutional investors, like pension funds and hedge funds, to trade large blocks of shares without moving the market price too drastically before the trade is finished. It sounds mysterious, and it is. It's where the whales play behind the scenes. So, to answer the question, how many stock markets does America have? Physically, it's a handful of major headquarters. Digitally, it's a network of over 24 exchanges and thousands of OTC platforms. Together, they host over 12,000 publicly traded securities, creating the most liquid and transparent pool of capital on the planet. But who keeps all these players in check? How do we know the prices are real and the companies aren't lying? For that, we have to look. So guys, let's talk about number 2 point means. Now, who are watchdogs of Wall Street? Means who regulates US stock market? Who are the authorities who manage fair trade in stock market? So guys, if the US stock market is a high-stakes game, the SEC, the Securities and Exchange Commission, is the head referee. Established after the Great Depression, the SEC has one primary mission: to protect investors and maintain fair, orderly, and efficient markets. In 2026, their job has become more complex than ever. They don't just watch for insider trading, they are now heavily focused on generative AI and how companies use algorithms to influence stock prices. Every public company you see on the NYSE or NASDAQ is legally required to disclose their financial health to the SEC. If a CEO hides a loss or lies about a profit, the SEC has the power to level massive fines or even bring criminal charges. They ensure that whether you are a billionaire or a college student with $50, you are looking at the same set of facts. While the SEC handles the big picture laws, there is a second, very important police officer on the beat: FINRA, the Financial Industry Regulatory Authority. Think of it this way: the SEC writes the laws, but FINRA walks the streets. FINRA is a self-regulatory organization that oversees more than 3,200 brokerage firms and hundreds of thousands of registered brokers. In their latest 2026 Regulatory Oversight Report, FINRA has made it clear they are cracking down on cyber-enabled fraud and how social media influencers might be illegally pumping stocks. They are the ones who make sure that when you buy a stock through an app on your phone, that transaction is handled honestly, and your money doesn't just vanish into a digital black hole. So guys, regulation in 2026 isn't just about old books and ledgers. The rules of the game are evolving. AI governance. As of this year, the SEC and FINRA require firms to have strict oversight on AI-generated trading. They want to ensure that hallucinations or biased data don't cause a flash crash. Tokenized securities. The US has recently clarified that tokenized equity stocks traded on a blockchain are still securities and must follow the same strict rules as Apple or Tesla. T+1 settlement. We have officially moved to a system where trades settle in just one business day. This reduces risk in the system but requires technology to be flawless. Without these regulations, the $70 trillion in the US market would evaporate overnight. Investors put their money here because they trust the system. It's a delicate balance of innovation and restriction, allowing companies to grow while ensuring they don't cheat. But speaking of that $70 trillion, exactly where is all? Number 3, we will talk about the geopolitics and the Trump factor, war, tariffs, and market turbulence. In 2026, the charts on Wall Street aren't just reacting to earnings reports, they are reacting to missiles and diplomacy. The escalating conflict between Iran and Israel, with the United States providing strategic support, has introduced a massive geopolitical risk premium to the market. Whenever tensions flare in the Middle East, the first reaction we see is in the energy sector. Because a significant portion of the world's oil flows through the Strait of Hormuz, any threat of war causes crude oil prices to skyrocket. For the US stock market, this is a double-edged sword. While energy stocks like ExxonMobil may see gains, the broader market fear kicks in. High energy prices lead to inflation, which forces the Federal Reserve to keep interest rates high, a move that typically hurts tech stocks and consumer spending. In short, war creates a flight to safety, where investors dump risky stocks and run toward gold and US Treasury bonds. Guys, the return of the tariff trumps America First trade war. Adding to this volatility is the return of aggressive trade policies under President Donald Trump. The 2026 economic landscape is being reshaped by a tariff-first approach. President Trump has consistently used tariffs as a tool of negotiation and a means to protect domestic industries. Whether it's a 10% universal baseline tariff or specific levies targeted at China, France, and even strategic partners like India, the impact on the stock market is immediate. For China, tariffs on electronics and manufacturing components often lead to a sell-off in the tech sector, as companies like Apple face higher supply chain costs. For France and the EU, retaliatory tariffs on luxury goods and wine can hurt the international revenue of major US retailers. For India, as a growing hub for IT and pharmaceuticals, any trade friction creates uncertainty for the multinational corporations that rely on Indian talent and manufacturing. Let's see how the market processes protectionism. To a US investor, tariffs are viewed through two different lenses. On one hand, Protectionism can boost the stock prices of domestic steel, aluminum, and manufacturing companies because they face less foreign competition. This is the America First rally. On the other hand, economists warn of cost-push inflation. If it costs more to import parts from India or China, American companies pass those costs to the consumer. Wall Street hates uncertainty, and trade wars are the definition of uncertain. Every time a new tariff is announced via a late-night social media post or a White House press briefing, we see massive intraday volatility, where the market might swing hundreds of points in minutes as algorithms try to calculate the new cost of doing business. So, between the physical wars in the Middle East and the economic trade wars across the Atlantic and Pacific, the US stock market in 2026 is a battlefield of its own. It's a test of resilience. The big question for every trader now isn't just, how much did this company make, but how will this company survive the next headline? Now that we understand the risks, let's look at the sheer scale of the rewards. Exactly how much money is currently sitting in the US market? Number 4, we will talk about how scale of wealth is in. How many trillions of dollars are flowing in this deep ocean of stock market? So guys, if you want to truly grasp the power of the US stock market, you have to look at the market capitalization, the total value of all shares in existence. As we sit here in April 2026, the combined value of the US markets has reached a mind-blowing $70 trillion. To give you some perspective, that is more than the GDP of the next top 10 largest economies combined. This isn't just a national treasure, it is the world's savings account. Nearly half of all the equity value on the entire planet is concentrated right here in American exchanges. Why does so much money flow here? It's simple: liquidity and trust. Whether you are a sovereign wealth fund from Norway or a retail investor in India, the US market is the only place deep enough to handle trillions of dollars in transactions every single day without breaking a sweat. Let's see the battle of the titans, Nvidia versus the world. But where is all that money concentrated? In 2026, we are witnessing a historic battle for the title of the most valuable company on Earth. For years, Apple and Microsoft traded blows for the top spot. But today, the crown belongs to the AI powerhouse, Nvidia. With a market cap hovering around $4.7 trillion, Nvidia has become the heartbeat of the modern economy. Their chips power every AI model, every data center, and every futuristic piece of tech you use. Following closely behind are Apple at roughly $3.9 trillion, and Alphabet, Google, at $3.7 trillion. When these three companies move, the entire world's retirement accounts move with them. Guys, we are learning about the giant stock market of world, so we should also have the information about the single most expensive share of US stock market? The answer is Berkshire Hathaway. Now let's answer a fun but fascinating question. Which company has the highest price for a single share of stock? Many beginners think it might be Amazon or Tesla, but the real answer is in a league of its own. We're talking about Warren Buffett's Berkshire Hathaway Class A shares. As of April 2026, a single share of Berkshire Hathaway Class A will cost you over $715,000. Yes, you heard that right. One single share costs more than a luxury home in many parts of the US. Why is it so high? Because Warren Buffett has famously refused to split the stock. He wants long-term investors, not short-term gamblers. While most companies split their stocks to keep the price around $100 or $200, Berkshire Class A stands as a towering monument to long-term compounding. So guys, from $70 trillion in total value to $700,000 for a single share, the scale of this market is almost impossible to imagine. It is a testament to the sheer volume of capital that moves through the American system. So guys, in this video we have deep dive into the most powerful financial engine on the planet. From the chaotic trading floors of the NYSE to the digital frontiers of the NASDAQ, and from the complex world of SEC regulations to the massive global impact of tariffs and geopolitical conflicts, we've covered the entire landscape of the US stock market in 2026. We've seen how a single company like Nvidia can command trillions of dollars, and how a single share of Berkshire Hathaway can cost more than a house. But more importantly, we've looked at how you, as a student or a professional, can bridge the gap and build a career in this high-stakes industry. So guys, my goal with Anandeshwar Uncovered is to peel back the layers of most important things happening in this world linked to dot, and give you the raw, unfiltered truth. If even a single minute of this video gave you a new perspective, or if you walked away with just one piece of information that makes you a smarter investor or a more informed student, then my mission is accomplished. But this journey doesn't end here. The markets are shifting every single day, and I'll be right here to track every move. If you found this breakdown valuable, please hit that subscribe button and turn on the bell icon. It's the best way to support the channel and ensure you never miss a deep dive. Smash the like button if you enjoyed the research and drop a comment below. Are you bullish on the US market for the rest of 2026, or do the trade wars have you worried? Thank you so much for watching. Stay informed, stay curious, and I will see you in the next one.